Cathie Wood is a little bit of a polarizing figure in the investing community because she generally chooses to invest in very disruptive type of companies that are more future oriented in their business, meaning they have a lot of future potential, but at the moment they often struggle with things like profitability and other types of issues that maybe more conservative or value oriented investors are not a big fan of. As for me though, while I don't generally invest in most Cathie Wood stocks, I still love to track her purchases for two reasons. Number one, I think they're fun companies to dig through in hopes that we might even find a couple hidden gems. Number two, I give her huge respect for not only sticking to what she believes in, investing in future disruptive technologies, even if they are a little higher risk stocks, but also because she shows us all of her stock purchases as soon as they happen, whereas most other giant institutional investors only release their trades once per quarter because the government forces them to. So for that alone, I think we should give major props to Cathie. And really the nice thing about it is, well, in today's video, we get to run through 5 of her largest purchases that she just made this very month, basically in just the first couple weeks of October, and it was already worth tens of millions of dollars worth of trades. So it's going to be a ton of fun to look at, and this is really a lot of money here that she's investing in only really a matter of days. So I can't wait to share these with you. Now, as always, I'll run through the list here. I'll give you my quick opinion on each stock purchase, and I'll even rank them from best to worst too based on that opinion. So I hope you guys enjoy the video. And by the way, if you want to see my daily stock purchases in our community portfolio, you can get access to that through Patreon and in the description, and you can join our community Discord where I post one stock purchase every day, and it's a ton of fun too, so I'd love to see you on there. But thank you for all the support, guys. I really couldn't do this without you, so thank you. Let's not waste any more time. Let's go ahead and jump into this list here of 5 stocks Cathie Wood is buying right now. All right, now we'll be running through these here from smallest to largest purchase. And, you know, for how risky Cathie Wood stocks tend to usually be, purchase number 1 was actually a stock that I think is pretty reliable long-term, and that is AMD, ticker symbol AMD, which Cathie picked up over 7,000 new shares of at over $1 million worth of stock. And yeah, I actually really like this pickup here. In fact, I used to be heavily invested in AMD myself back in the day, but after it skyrocketed in price, I ended up selling those shares for a huge profit, and I ended up focusing more heavily ever since on investing in Nvidia instead. But after those movements, more recently, AMD has actually fallen back down a little bit in price, losing a quarter of its value from the top, which kind of shockingly, I mean, I would bet that most of you might not even know this, but AMD's valuation as of right now currently sits about 40% lower than the sector median on a PEG ratio basis, which is incredible. AMD has really always been kind of a more highly valued growth stock, but what's happening here is that they really grew a lot during the pandemic years where their financials skyrocketed, but coming off of that, there was a small pullback there, like a correction, and that caused the stock to fall. Now, I know that their regular PEs are a lot higher at the moment, but that's because those use current financials, whereas with AMD, you really have to look out further into the future for the recovery taking place, where, for example, sales are expected to soar again by a double-digit rate this year and another close to 30% next year too, while their EPS profits are also expected to rise by over 30% per year over the next 5 years, which is why that valuation is so cheap on that PEG ratio basis. And you know, it's really easy to understand why AMD would have high expectations for the future because, well, I'll put it this way, what I always liked about AMD is that, for example, Nvidia always focused on dominating GPUs while Intel focused on dominating CPUs. And of course, with the rise of AI, well, GPUs ended up having, you know, much more success and thus helping Nvidia. But what I always liked about AMD is that they kind of played this cheaper alternative option or role, to both sides of those markets. And to this day, they remain well diversified across CPUs, GPUs, APUs, even AI accelerators, which are a new type of chip. And all of that really helps them diversify across many different segments and markets: consumer computers, business computers, high performance, graphical design, AI, the data center, and even gaming. A lot of people don't know this, but AMD actually is used by both Xbox and PlayStation. So they're big in gaming too. And so coming off of the pandemic correction as that alternative option to the other giants, I just feel it leaves AMD with a very kind of lucrative spot to capitalize on, because these markets will be worth trillions of dollars long term, and customers will look for multiple options. It's not just going to be Nvidia. Yet Wall Street is kind of pricing them as if it is that way, but I don't believe that. I think there's so much more room for AMD to compete in and to grow, and we're already seeing that recovery take place with them, with last quarter seeing sales rebound, margins rebound, and even their profits by EPS and net income rose by 700 and 800% respectively. And when you look at their most important segment of all, the data center that houses all of their work in AI, well, sales more than doubled while operating income soared by over 400% and now generating the most profits of all for them. So I do believe that AMD is on the right track for long-term success. And even though I already own tons of Nvidia stock and even a little bit of Intel stock too, I'm actually thinking about buying back into AMD soon here as well. I might do it. I don't know. It's looking tempting, but yeah, I think there's room for multiple players, I should say, out there, and AMD stock does look attractive at the moment. So I agree with Cathie's pickup here, and I'm going to rank it pretty high at number 2 for now until I see what else is on this list. All right, moving on to the next purchase. This one is for sure a much more speculative, higher risk pickup here, and that is Blade Air Mobility, ticker symbol BLDE, which Cathie purchased over 400,000 shares of in October, valued at about $1.5 million. Now, the reason that I say that this one is very speculative is because it's essentially a penny stock here. It's only worth about $3 at the moment after falling dramatically from their 2021 IPO. I think around that time it was like over $10 a share. So that's like 3 times higher than where it sits today. Now, that may present a good buying opportunity, and Cathie certainly seems to think so here as it's down, but I'm a little more hesitant on this one myself. If you've never heard of them, Blade is kind of like an air taxi type of service where they partner with aircraft operators to then provide short trips to paying customers, usually in the form of helicopters. For example, the largest part of their business right now, at around 60% of sales, is in helping hospitals speed up the delivery of vital organs for transplants. However, the more widely known part of their business, although it's smaller at the remaining 40%, is in providing short-range air travel to regular consumers, especially quick trips from densely populated cities over to airports, for example, where the customers can then catch their longer range flights. It's of course just a time-saving kind of specific service that customers are willing to pay a premium price for. For example, a quick helicopter ride between Manhattan and the JFK airport takes less than 5 minutes for them, but it's going to cost you about $200 per person. Now, I don't disagree that that's a cool service in itself. I mean, they even have lounges at airports with great reviews. The helicopter rides seem to be fun and even scenic. And they even have a pickup car service too to take you to the helicopter. But I just think it's more of a niche kind of market here for people with, perhaps I would say, disposable income that can afford it, or especially people on vacation or for business travel where maybe the company might even pay for it. And sure, that might be a large enough market for them to have relative success in, but again, I just feel that that's a little bit limited in scope. I can see it being a popular option in really densely populated cities, but not a whole lot anywhere else. And the average person, I just feel, would rather save the money and just maybe use an Uber or use their own car or have a friend drive them to the airport, stuff like that. So I'm just not sure that this is really a giant enough market to be investing heavily into, because when you look at their financials, sales did rise a lot these past couple years, but losses have been heavily in the red, and their upcoming revenue growth of only around 10% expected in the next 2 years just isn't enough to really overlook that, in my opinion. Now, I do think it's relatively fairly valued as a speculative kind of future looking stock with a PS ratio of about 1. That's roughly what I would expect for a stock like this. But even then, I just think that there's much more interesting speculative stocks out there that I'd rather be gambling on. So it's going to be a pass for me, and I'll give it the number 4 ranking for now. All right, now moving on to purchase number 3, though, we actually have a stock that I am heavily invested in myself, and that is Tesla, ticker symbol TSLA, which Cathie picked up another 13,000 shares of this October at almost $3 million worth. And yeah, no surprise here, right? I mean, we all know that Cathie has been one of the biggest Tesla bulls throughout history, and even recently to this day, she still has one of the most bullish price targets on the stock. In fact, ARK actually just updated their price targets for Tesla back in June, giving Tesla a base price of $2,600 per share by 2029. That's over a 1,000% increase from where it trades today. And even in the bear case scenario, they expect it to rise to $2,000. That's an 800% increase. And in the bull case, they think it could even break north of $3,000 per share, which would be over a 1,300% increase. That's pretty wild. Now, for its part, Tesla stock has actually been struggling a lot recently, losing about close to half its value from the top. And while they are working on very innovative technologies, some of which were shown off at the recent robotaxi event, the fact is that these initiatives are still likely to be at least a couple years out before reaching, public roads, if that. By the way, if you want a really quick recap of that robotaxi event, I actually did a less than 10-minute video of it recapping everything they announced, so feel free to check it out if you'd like to. But yeah, when talking about Tesla, it is going to be a little hard to convey the bullish viewpoint to the average person out there, because it really is that very long-term minded type of company with robotics and AI and robotaxis and a robovan and battery storage. All of these types of markets can be worth trillions in the future, and likely will be, but they're markets that are still, I feel, a long ways out until we reach those levels, until they mature, until they develop. And so at the moment, I just feel that Tesla stock is going to be probably a little more so in control by the bears than the bulls, at least than it has been in the past. And I feel that that's going to cause some volatility and make the stock a little riskier than usual, especially at the current valuation that is hundreds of percents more expensive than the sector. Because you have to remember, guys, even with the recent dip, the stock is technically still up by well over 1,000% just in the past 5 years alone. So it's climbed a lot. Now, don't get me wrong, I do love the growth that Tesla has had in recent years, which is why the stock has risen by so much. And there's, of course, a reason why it's still a top 5 holding of mine, because of how much I believe in their future potential. But at the moment, I'm just saying that we have to be honest about the difficult kind of correctional period that Tesla is in right now, where sales are almost flat this year. And it's going to take a better, I feel, macro economy with less inflation, lower interest rates, and some of their future markets actually materializing and taking shape for that growth to shoot up, back up once again, at least in my opinion. So for that reason, I'm going to rank them at number 3 for now, despite this being a stock that I own myself, just because it really is more of a long-term stock that I think most investors and traders wouldn't have the patience for, or maybe the stomach for that volatility of it. All right, guys, with that said, though, this will bring us now to the final 2 purchases of the list. These were the largest of the bunch here, and coming in at number 4 was actually my far and away favorite of the entire list, and that is Amazon, ticker symbol AMZN, which Cathie picked up close to 300,000 more shares of, worth over $14 million. And yeah, I love this pickup here. I'm obviously not going to be, super excited about Amazon's current price trading right near a record high. But when it comes to Amazon, I'm always willing to pay that premium price tag for what is, in my opinion, one of the most crucial, dominant, and just heavily relied on businesses in the world, both right now and for the future, particularly with e-commerce and cloud computing, where they completely dominate both markets. And those are 2 of really the most important markets in the entire world for the future as well. But even in the other stuff that they do too, that they do so well, there's still so much more future potential and growth for them to tap into. Like, for example, in digital advertising, that used to really be a duopoly just with Google and Meta controlling the market, but now you see Amazon closing in and turning that into much more of a triopoly, while still growing their sales for the segment at over 20%, a 20% clip there. And that's just one example, but really every part of Amazon's business continues to be on fire, and that's why they do over $500 billion in sales, and yet are still somehow managing to grow at a double-digit rate despite that enormous size. It's really incredible. And because they never cared about profits in the past, past, well, there's still huge room for expansion on the bottom line too, which is why I actually think that the stock price should be even higher than where it already is if you're thinking long term. Over the past year, for example, their free cash flow skyrocketed by nearly 600%, and yet Amazon's market cap is still well over $1 trillion less than both Apple and Nvidia, something that doesn't really make a lot of sense to me, considering that I would much rather own Amazon stock over either of those other two. And so I know it's hard to look at Amazon as kind of a slept on stock when their products are used by so many people and the company is so well known, but I actually do think there is a little bit of a slept on kind of nature to the stock when you consider their profit potential long term. And because of that, I'm easily giving them the #1 ranking here on this list. All right, guys, that'll leave us now, though, with the fifth and final purchase, where we finally have a biotech in 10x Genomics, ticker symbol TXG, which I say finally because we all know how much Cathie loves her biotech stocks, with this one in particular being another 1.2 million shares added in October, valued at over $18 million. Now, when it comes to 10x, this is, of course, a genomic research type of biotech that primarily sells analyzer devices and other related services for laboratory use, where these systems are capable of quickly analyzing thousands of different data points related to cells so that they can be better understood, and then the data is used for various applications within biomedicine. For example, their cell immune profiling system can analyze how T cells respond to various infections, which was even used during the pandemic for analyzing the pepperoni and finding treatments for it. It's all very impressive work, which is why their tools are already being used by every single one of the top 100 research institutions in the world, with more publications filed than much of their competition. As such, it's very likely that their products and services will remain in high demand well into the future. However, at the moment, despite surging sales, their profits have actually been pretty horrible for years, which, even looking ahead, analysts only expect a single-digit rise in sales this year before rebounding to just barely a double-digit growth rate the year after. But even after seeing the stock crash by over 90% coming off the pandemic, their price-to-sales ratio of almost 3 is still a bit too high for my liking, especially with the weaker growth. I can understand why Cathie is buying it, though, after the huge drop, but because this is a business that I feel I would have to research very heavily and stay constantly up to date on, I just think it's too much of a speculative option for me at the moment, when I'd rather gamble on something that I can at least understand a little bit better. I do think the market that they operate in, though, is at least more exciting, I would say, than Blade Airs. So I'm going to push Blade down one spot so that I can fit 10x just above them at #4. But there you have it, guys. These are my final rankings. Let me know if you agree or disagree with them, if you would make any changes, and if you're invested in any of these yourselves, and why or why not. I'd love to hear your opinion on them. But either way, I hope you enjoyed the video, and I thank you for your support. And I hope you're all doing well out there, my friends, and I will catch you in the next video. All right, take care, everybody. Bye-bye.